That's right, Chipotle, the Mexican grill company, just announced the largest stock split in history, and it's going to be a 50-for-1 stock split. If we look on Seeking Alpha, we can see this company is currently trading at $2,903.44 per share. Now, a stock price at $2,903 doesn't necessarily mean the company is expensive or trading at a high valuation, but it does mean that it's pretty hard to buy just one share. Now, obviously, some brokers do offer fractional share buying, but for a lot of people, this makes it extremely difficult to buy just one single share of Chipotle. So what exactly does this stock split mean, and what does it mean for investors, and how is Chipotle performing as a business? Well, over the past year, this company is up around 76.2%, so a very good past 365 days, and over the past 5 years, up over 329%. So this company has definitely been a quality compounder over the past 5 or so years. Now, we do need to take note of a super investor who is heavily invested into this fund, and that is Bill Ackman. And around Q3 of last year, Bill Ackman's fund owned around 3.4% of all of Chipotle's outstanding share capital. Now, they did sell off some capital in the most recent quarter. They reduced this position by around 13.5%, but Chipotle is still by far the largest position in Bill Ackman's personal portfolio, making up around 18.15% of his entire portfolio. And it's also worth noting, if we scroll down, we can see that his fund has been holding this company since Q3 of 2016. If you use the ticker data function, we can see exactly as of right now how many shares outstanding Chipotle has. I'll go ahead and hit enter. And so once this loads in, we can see Chipotle has around 27.5 million shares outstanding currently. Now again, this is going to be a 50-for-1 stock split. Again, a massive stock split. So what does this mean for their shares outstanding? Well, if we take this number and multiply it by 50, we can see their shares outstanding after the stock split will be sitting a little bit closer to around 1.37 billion. So what does this exactly mean for us as investors? Well, let's go ahead and jump over to our stock screener tab and start breaking this down. If we come over here and plug in CMG and hit enter, again, this data will automatically load in thanks to the ticker data function in Google Sheets, and you can also download any of my sheets on tickerdata.com at the link in the description. But if we come down here, we can see shares outstanding for this company. Again, in 2023, it was sitting at about 27.5 billion. Now, ideally, when I invest into a company, I want to see their shares outstanding decline over time. Now, why is that? Well, a company has the option to buy back shares with their free cash flow. There's 5 different things that a company can do with free cash flow. They can reinvest back into the business, pay down debt, they can attempt mergers and acquisitions, they can pay out dividends, and of course, they can buy back shares. So when you own a company and they're constantly buying back shares, it gives you more ownership in the company, providing more value to the shares that you own. But like I just pointed out, Chipotle shares outstanding is about to jump up to around 1.37 billion. So is that a bad thing if you're invested into the company? Well, actually, no, it's really not bad for the company. A stock split really doesn't do anything to change the fundamentals of a company. Instead, all these metrics on a per share basis will basically be adjusted to just reflect the new amount of shares outstanding. And so if we zoom in and look at the current stock price, again, around $2,903.44. But with the stock split, we can do some quick math and see maybe around where it'll be priced at when the split actually happens. If we take this number and divide by 50, we can see it looks like the company might be priced around $58 to $60 per share. Now, we do need to keep in mind this stock split isn't set to happen for just a little while. The company's shares are expected to begin trading on a post-split basis at the market open on Wednesday of June 26, 2024. So we still have a few months before the split actually happens. Now, if we look at this company's metrics over the past decade, there is clearly a lot to like. Now, to point out first, this company does not currently pay a dividend, so they're much more focused on reinvesting back into the business and also buying back shares. And just look at their earnings per share from 2017 to 2023. They went from around $6.19 all the way up to $44.59 in earnings per share. So the profitability of this company has absolutely exploded during that time period. We can see revenue per share from 2013 around $103, jumping all the way up to $358 in 2023. Again, that's pretty phenomenal. And then one of my absolute favorite metrics to look at, free cash flow per share. This has done very well over the past decade as well, especially again from 2017 to 2023, because like I just mentioned, there are 5 different ways that a company can reward their shareholders with free cash flow per share. So obviously, since I want to be rewarded as a shareholder in the companies I own, I need my companies to grow their free cash flow per share. And personally, since I'm a dividend growth investor, if I want them to be able to grow their dividend payments over time, I need them to grow their free cash flow per share over time. So while Chipotle doesn't currently pay out a dividend, their capacity to pay out big dividends and growing dividend payments in the future is continuing to increase as their free cash flow per share increases. Now, one of the charts that I really like on the stock screener is the debt to assets chart. This is also known as the debt ratio, and essentially it indicates what percentage of assets are currently being financed by debt. And as of 2019, it looks like this is in a pretty healthy range, ranging from around 50 to 56%. So if you don't know much about this ratio, that's honestly a pretty healthy range. For example, if you want to look at a company that's not necessarily in a healthy range, let's plug in Domino's Pizza and hit enter. Now, before I'm critical of this company because of their debt to assets chart, I do want to point out this is a company I own in my personal portfolio, and it's performed extremely well for me and extremely well over the past 15 years. But one red flag for this company is their debt to assets. Again, otherwise known as the debt ratio. We can see their total debt is far higher than their total assets. And eventually, this is definitely something that the company needs to address. Now, if we go back to looking at Chipotle, the last thing I want to point out is their return on invested capital. Now, what's a good ROIC for a company like Chipotle? And obviously that can depend on a few different things, but overall it's generally considered that an ROIC over 10% is pretty solid. And we can see in 2023, they achieved an ROIC of around 10.6%. So pretty profitable company. And in fact, if we jump over to the profitability sheet here, we can see how their earnings per share has exploded over the past few years, and we can see their gross profit ratios are actually increasing as well. If we look at the 10-year average gross profit ratio sitting at about 21.71%, but their gross profit ratio in 2023 was sitting at 26.2%. So that is a great way to add more dollar signs to the bottom line. Now again, when we talk about a stock split, look at revenue in 2023, sitting at about $9.8 billion. A stock split won't affect this in any way whatsoever. The company is still going to be generating the same amount of revenue, but it does mean that revenue on a per share basis will be affected. So again, we do have to keep in mind that fundamentally nothing about the company changes with a stock split, but it is worth noting that stock splits can impact the stock price in the short term due to changes in supply and demand dynamics and more liquidity in the markets. So go ahead in the comments down below and let me know what you think of the Chipotle 50-for-1 stock split. This company has clearly been a quality compounder over the past 5 and the last 10 years, and so I'll be interested to see how it performs moving forward. And like always, if you'd like to be able to download any of my spreadsheets and get access to the ticker data add-on in Google Sheets to automatically get stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.